There is a common question that I get on all of my videos when I do my daily Bitcoin updates for you guys, and that question is going to be answered in today's video. I am, of course, talking about all of the indicators that I use in order to trade my system. So in this video, I'm going to be going through all of them with you and give you a brief explanation on how to use them properly. Now, the reason that I choose the indicators that I do is because they allow me to have a high level of accuracy, but that can only come from really understanding extremely well how to use the indicators to their best potential. Being able to cover all of that in one video is going to be an impossible task, but this video at the very least will give you the first stepping stones towards understanding the indicators that I use for my trading strategy. So before we get into all of that alpha, if you are new here, welcome. If you're returning, welcome back. Even if you've been watching this channel for quite some time, this video is going to be of value to you because it's going to help you to further understand why I say the things that I say on my usual daily updates. Be sure to smash that like button, hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. Now let's get into these indicators. So what you're looking at on the screen here is everything that I use on a daily basis. There are other indicators that I will bring in at different times if these indicators aren't giving me enough information, but for the most part, these are my kind of go-to indicators. And the first one I'm going to talk to you about is a public script that we actually created at Trade Travel Chill. It was created by my community members, and that is available for anyone to use. That indicator is called the market session times. To grab it, you just go up to indicators. In the search bar, you can type market session times, and then look for the one that comes up as Trade Travel Chill. That's the one that you want to click on. Now, just so you can see it clearly, I'm going to turn off my other indicators, and this is what the market session times on its own will show you. Number one, down here, you can see that it has the different time zones marked out for you. You can also see slightly shaded background here for a small period of time, which I'll explain. And then finally, we also have moon cycles. Now, I use moon cycles and astrology in my trading when I need to go in depth and I'm looking for the longer term swing trades. I find astrology tied in with my trading method to be very, very accurate for that. But if that's not something that you believe in or that you're into or whatever, you don't have to use this part. So let me just show you how to change the settings on this indicator. If you go to market session times, click on the settings. It's the very first option there. So if you don't want to use moon cycles, just untick that and the moons will be gone completely. Some other things to explain down here is that you have options to shade the entire background if you want to. You'll just click on these gaps here and that will shade them. I prefer to have the shading off other than the dead gap zone, and I prefer the dots down the bottom. So if you want the dots as well, then you just keep these ticked off, and then you can also choose whether you want these dots to be at the bottom or at the top of your chart, simply here by choosing top or bottom. Now, when you go down to a 15-minute time frame, you can see that a little bit more clearly. So here it shows the start of the Asia session is where the gray dot starts, and the Asia session ends at the end of that turquoise dot there. So there's a little gap in between each session, and that's because there is a gap change over where the market makers communicate with each other. So that gap there is to show you that this is the changeover session. That is there intentionally. And then the sessions are labeled with what session is starting. The shaded area that you see here, it's very, very slightly shaded. That is the dead gap zone, and that is the zone where no market makers are on duty. So it's a highly manipulated zone. There are ways to understand the price action in the dead gap zone to get your trade for the day, but that's kind of complicated. We won't go into that. The better thing to know about this is that if you're learning to trade, this zone right here is best to be avoided simply because it's unpredictable. Because if the market maker is off duty, that means the volume drops, and when the volume drops, it's easier for whales to come in and manipulate price action, and you kind of don't really want to be a part of that. Now, moves are made usually within the gap, so the best time to get your trades is within gaps, either between Asia to UK or UK to US, and again, that's why it's shaded. The turquoise color that you see, now I've changed these colors to be my preferred colors. Once again, in the settings, if you want These are where you change the colors. You can change them to whatever you want. And the extension is that turquoise part right there. You don't have to use that if it's not important to you, but for us, we want to know when that extension is coming, because the extension at the end of Asia and UK is the setup for what the next session is going to do. So when you understand this method in full, those dots and why they're shaded a different color, they become a little bit more important to you. Now on a Friday, these will stop shading the dots because it's only shading the market session times, which is from Sunday 5 p.m. New York to Friday 5 p.m. New York. The rest of the time is non-tradable time, so we don't include those times. And the other thing to note too is that we have set this to always be New York time. So no matter where you are in the world, you don't have to worry about this matching up. You don't have to worry if daylight savings changes time zones or anything like that. It's always going to be configured to New York time. And what that actually means is that you can use the dots to automatically know New York time, but down here, which you may not see because I might be in the way, let me just get rid of myself. So down here where it has the time zone, you can actually have that on your own time zone. So let's just say you live in Sydney, you select Sydney. When you're scrolling over a certain period of time, that's going to show you the time for you. So in this case, 10:15 a.m., but that is Asia open on that dot there, which is actually in New York time. Hope that's not too confusing. Now let's move on to the next indicator. And the next indicator is called Trade by Design. It is one of our indicators and it is a custom locked indicator. It's only available to our premium members that have a membership with us. It doesn't cost anything to have it. It's just part of the membership. So if you're not a member of TTC, you won't have access to this indicator, but I'll still talk you through how it works because you can manually draw these things out. It's just a little bit time consuming, but it's possible. And you can also find some of these things in other indicators. The advantage with the TBD indicator is just that it's all done for you within the one indicator. And on that note, if you are wanting to learn our methods in full, consider joining us. Down in the description of this video, you will find my Traders Toolkit. If you click on that, it's going to give you the link to our website where you can learn more about our courses and our community and what we have on offer. It's also going to give you links to the exchanges that we use and access to get trading fee discounts and things like that. So make sure you check out that Traders Toolkit down below. And now I'm going to explain to you this Trade by Design indicator. So you can see here that it's done a few things. First of all, it's colored my candles in all sorts of funny colors, which I'll get to that in a second. We've got a number of EMAs that you can see here. There's 5 in total, and it's also got some funny looking lines across at different points in the chart. Now, what this indicator does is it marks out for me automatically some very key levels that I need to know about price action that has happened in the day or the week prior that are going to act as magnets for price action in the next coming week. So one thing that it automatically marks out for me is what you can see here, these 2 big lines at the top and the bottom right here. That's marking the high and the low of the week. So it's the highest point that price went in the week prior to the week that I'm trading and the lowest point that price went in the week prior to the week that I'm trading. Those become key levels because they're either going to become an area where price bounces in the next week. You can see down here, this was the low of the week. And again, these shaded backgrounds show you each day. So Monday, Tuesday, Wednesday, Thursday, Friday. We have no shading here. So that's the weekend. But you can see here that as we hit that low there, moved away, price came back to it in the following week. So price acts as a magnet. Even up here at the high of the week, price tried to make an attempt to come back for it at another period in time. So the highest and the lowest point that price went in the week prior to the week that you're trading is a very, very significant level that you need to know every week. Now, you absolutely can just grab yourself a trend line and manually draw these out every week. We used to do that in the community before we had our amazing community members design this indicator. So it is possible, and to be honest, it's good practice as well because it makes you conscious of those levels. But now if you're in the community, you don't have to manually do them. Then in addition to that, the next level that is really, really important is the high and the low of the day, which acts on the same principle, only difference being it's marking the highest point and the lowest point that price went the day prior to the day that you're trading, as opposed to the high and the low of the week, which is the week prior to the week that you're trading. So they're marked out day by day. And if you see a high and a low of the day on this day, which is a Monday, it's referring to the day prior. If you see a high and a low of the day on a Tuesday, it's referring to the highest and lowest point that price went on the Monday, and so on and so forth. And again, these act as magnets for price to return to those areas. You can see down here that price wicked into the low of the day, shifted away, came back, wicked into the low of the day again. Here we had a high of the day created, price shifted away and came back to the high of the day, and that's what it will continue to do until it eventually decides to break down and reverse from that area, or push through it and then go to create a new high of the day. And then finally, we have the last level, which is the initial high and low of the day. And the initial high and low of the day is the period in Asia time zone for the current day that you're trading. So it's the highest point that price went in your current Asia session and the lowest point that price went in your current Asia session. We need to know those because once they're both set and they hold for about a 90-minute period of time, that's when it's considered safe to trade. So there's certain things that we look for with the initial high and the low of the day in Asia, because Asia is setting the trading range and it's setting up for UK and US to either then break the range to the upside or break the range to the downside, which we can see here. Initial low of the day set, initial high of the day set, and then in the next session here, UK, at this point in time, price has tried to break it, and it has not broken above it yet, but it's tried to break above it to create a new high of the day, potentially rejecting. So this is what we look for. We look for failed or successful attempts to break initial highs and lows of the day to give us a hint on what direction price is going to go in for the rest of that particular day. Then we've got the EMAs. The EMAs that we use are the 10, 20, 50, 200, 800. No matter what time frame we're trading, those are always our EMAs. When price is breaking down out of an uptrend or it's breaking up from a downtrend, we first want to see price cross the 10 and 20 EMA, but our 50 EMA is always the one that confirms a trend change. So from here, as an example, if this were to be an M formation right now, what we'd be waiting for next is for it to break the 50 EMA, which is the blue one. And if it breaks it and retests it, we're then going to expect that we're going to have another 2 level drops down, and it also works in reverse. Again, no matter what time frame you're trading on, we always wait for the 50 EMA to be broken with volume and then retested. The 200 can often act as a target, and the 800 also often acts as a target, or both of them as resistance. So it can be a target to take profit, or it can be a target for price to bounce for an entry, just depending on where you actually are in the cycle. And then finally, let's talk about these colors. So these colors come from an indicator called PVSRA, and you're actually going to add that one as well. When you type that in, you'll see it comes up here, PVSRA volume Creen Grack, I think it is. But if you add that one, it actually adds this volume bar down here, and we want to use those in combination with each other. So if you don't have the TBD system indicator, but you want to color your candles as well, you can go to the settings of this volume one here, and you just click on set PVSRA candle colors. That will change your candle colors as well. Sometimes you then have to go to your settings of your chart and you have to turn off your bodies, borders, and wicks because they kind of conflict. But if you're finding that it's not changing your candle colors, this will be why. Then in addition to that, depending on what you're charting, now I trade on OKX exchange. So as you can see up here, I have the OKX chart up currently, but because this is tracking volume, I want to know the volume that is the highest. So where most people are trading, I want to know that exchange's volume. So currently most people trade on Binance. So on the symbol here, you just search the Binance symbol for Bitcoin, make sure it says Binance here, add that, and then even though I'm using my OKX chart, because I need the chart for the exchange that I'm trading on to have the right price, it will override the volume and it will set it on my OKX chart so that I know the volume on Binance, but I know the right price on OKX. So that's how you can do that. So with PVSRA, you're looking for big volume spikes like this. That gives you a hint that the market maker is around, because the only people that we assume, this obviously is not a definite thing, but we assume the only people that can come in and put that much volume into one candle after, a low volume period are market makers. So that's why we want to know when they're showing up. It also helps us to know if volume is decreasing or increasing to expect further downside. So when we're looking at these big spikes, we're looking, are they growing in volume? To give you an example, this green spike right here, when you have a look at this here, that's moving to the upside. And then when we have a look at the next attempt, this one here, which is this stop hunt here, that volume is actually growing in size. When it goes the opposite way, so when the volume starts to decline, but you still have rising price, that's your hint that the move might actually be over soon. And you count your levels. And if you're at level 3 and you have, declining volume and you have stop hunts and you have all those sorts of things, then you'd expect a reversal to follow. So that's PVSRA. And then the final indicator that I use on a regular basis is open interest, and it's simply the open interest one under the technicals tab. Nothing fancy about it. You just click on that, but when you do, it's likely going to come up with an error. So you just click on the settings, and again, you want to override the symbol as well. So if you're trading Bitcoin, you will put in the Bitcoin symbol for Binance, for perpetual, by the way, even on the PVSRA. Make sure it's the perpetual contract, because these are for futures trading. So you want the perpetual volume. So you override it to the perpetual volume for Binance, and then click OK, and then it will show up properly. Now, just don't forget, if you are trading other things and you're switching from chart to chart, you might want to have different chart layouts, because you're going to have to constantly change that override symbol. For me, I really only just trade Bitcoin and Ethereum. So I have one chart set to Bitcoin, so I never have to worry about the settings. And then I have another chart set to Ethereum. And that kind of keeps me making sure that I have the right volume per the right coin. Because if I went to change this, for example, to ADA, then all of a sudden now I've got ADA price action on my chart, but these volume are tracking Binance Bitcoin chart, and that's wrong. So just be careful that you don't do that. Now, if I go back to Bitcoin, let's talk about this open interest. I'm going to expand it so that it's easier to explain, but essentially with open interest, it's giving me an idea of whether the market maker is matching orders to set up a trap, or are they offloading because they're about to reverse price, or what are they kind of doing? So open interest rises when there is an equal number of shorts and longs. So if a lot of people are longing, there obviously would be some people shorting, but if there is a discrepancy, the market maker is meeting the rest of those shorts, and that's what causes open interest to rise. So it's not a matter of everyone's going long or everyone's going short. It doesn't tell you the direction. It's not about that. It's about how many people are committing to the market. And that's very, very important in this method, because in order for the market maker to reverse price or to go for liquidations or to issue those stop hunts or things like that, they need commitment from retail. So open interest is a gauge for me to understand, are retail giving that commitment that the market maker needs before they make the next big move? And that's why I need to understand this very well when I'm trading. And a few different ways, I'll just give you some very quick key tips on open interest. Essentially, you want to use it on smaller time frames, so 15-minute or less. So when price makes a sharp move, like here, we had a sharp, fast move to the downside. Doesn't matter if it's to the downside or to the upside, but you see the open interest drop dramatically. That's your hint that people are getting liquidated in that area. So in order for price to go down and people to get liquidated in this period of consolidation here, people must have thought that was the bottom and they must have opened long positions. So because price went down, the long positions were getting liquidated. And on the other side of that, as price is dropping, there's not enough people to open long positions. They just can't do it fast enough, because you've seen these candles, I'm sure, how fast fast they move. Like humans can't keep up at enough of a rate to quickly go in and buy. So you see this massive drop because of the imbalance of one side dropping so fast and the other side can't keep up. Then when you have a consolidating period like this right here, and you have a rising open interest, that means in that consolidating period of time, people are happy to open positions. So they're happy to go long or short. Again, it's irrelevant the direction. What you're looking for is an understanding of whether or not retail are committing, because that gives the market maker something to play with. And in this case, we can see immediately after that drop, retail saw this as a buying opportunity because the open interest actually went higher than what it was prior. So many people jumped on into positions here, whether they went long or short. And as a result, that gave the market maker, you can see in this price action right here, it gave them so much to play with because they could send price up, which liquidates the shorts. Then they came right back the other way with another stop hunt and liquidated the longs. Then we went back into this consolidation period again right here. Now, when you have, if I stretch that out, again, you can see the same thing was happening. So we consolidated for a longer period of time here because people kind of were just chopping around. But look at towards the end of that consolidation, the open interest started rising again, meaning around here, people were happy to commit to positions. So they did that. But then the next part here is the next hint, which is when you have a rising price, but you have a declining open interest, the market maker's closing positions against you. And that's actually bearish, which we can see price peaked here and we did come down as expected. Then the same thing happens all over again. We go into a consolidation period. They have a rising open interest. At this point in time, they're assessing what's on the board. You can see wicks to the high here. You can see wicks to the low. Those wicks are inducing and testing retail sentiment. Once they feel that they have an understanding of that retail sentiment, they then make the next move. So when you have rising open interest and rising price, that's confluent, right? So it's opposite to what we had here, where we had rising price and declining open interest is bearish and led to a move to the downside. But here we had rising price and rising open interest, which should lead to a breakout to the upside. So I'll put a cheat sheet on this screen just to give you an idea of, in a very brief nutshell, what each thing means on open interest, but it really does only count on really small time frames. But yeah, that's it. That is an overview of the indicators that I use for my trading method. I hope you found this video helpful. If you did, please consider leaving me a comment down below. Let me know if there's any other tools or things that you know that I use that you'd like me to go through. And if you are considering joining the tribe to learn this method in full, just head to the description of this video, have a look for my Traders Toolkit to access my website for more details, and grab those links to the exchanges to get not only sign up bonuses, but also an ongoing 15% discount off your trading fees. Let me know your thoughts on these indicators in the comments below, and I'll see you on the next one.